Welcome to another episode of Equity Mates, a podcast where we explore what's possible in the world of investing. If you've just joined us for the very first time, we have a huge episode for you today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you going?
I'm very good, Bryce. Very excited for this episode. As always, there's a lot going on in markets. There's a lot going to happen in this episode. We're going to cover the news of the day. We're getting Mr. Beat Up back in the studio. Slightly different format this time. Normally, Mr. Beat Up comes and shares a stock that has been beaten down, the market's overreacted to. Today, he is reviewing your requests. We've got a number of requests through the Equity Mates contact form that he is going to cast an eye over. And then we're going to close it out with a community question on the new Bitcoin and Ethereum ETFs.
Now, you may have seen that there's been some new episodes in the feed over the last week introducing our new show, Basis Points. So we're pretty excited about the launch. Those episodes will continue this week. In fact, tomorrow there'll be one from an advisor called Adam Bajkars. But we're really pumped about this. It's a podcast for advisors, but accessible and free to all of you. And there's some really good quality content over there. Search it in your podcast feed, but also sign up to the email. We'll put a link in the description in the show notes.
So we're dropping the six launch episodes over the next 3 weeks. And more importantly, all 6 are available for CPD points. They're accredited by the FAAA. So if you're an advisor, get those CPD points, head over to the episodes and find out how. But Bryce, with that said, let's get into the news.
News and markets.
All right, as we get into the news, I'm declaring tariff-free zone.
Sure.
This is
finally.
This is a free trade podcast. I think there's so much news around tariffs, around Canada and the US dropping the gloves and getting in a hockey fight, about elbow calling.
You're
Trump.
talking about them.
No, this is my run-in to cover elbow calling Trump and Trump screening his calls. I think there's not a lot of merit and not a lot of long-term investing success to be built off continuing to do the will they, won't they.
I know. Let's just wait until there is some concrete decisions made. Well, let's start with some news here in Australia. We're almost in a correction on the ASX 200. The ASX 200 is down 9% from its most recent high. A reminder that a correction is defined as a fall of 10%. So we're not far off a correction on the ASX 200.
We hit our recent highs on the 14th of February, and then obviously the market fell out of love with us.
Yeah, that's it. So a number of large institutions have also cut exposure to the Australian stock market. BlackRock has followed the lead of Bridgewater Associates, one of the world's biggest hedge funds. They've cut exposure in their global markets portfolios.
Yeah, they both run like model, or I think the Bridgewater one's like the all-weather portfolio, and the BlackRock one is just like an all-world
They probably
portfolio.
looked at Commonwealth Bank and thought, let's get out of here.
And so I think you can see those headlines and you can think, oh, that's a bit scary. Australia's almost in correction. You know, these big institutions are cutting exposure to Australia. I think we just need to remind ourselves how regular a correction is. These numbers are from the US, but since 1928, so almost a 100-year sample size, the market falls 10% on average once every 11 months. The market falls 20% on average once every 4 years. These market falls are normal. They can be buying opportunities, but they are certainly not reasons to panic, to pull out of the market, and to forego your long-term investing strategy.
That's right. It is interesting to see, though, we are now back at levels in August last year. So all of that US election hype has been wiped.
Yeah, well, Tesla doubled and then halved.
Yeah.
And so it's back. It's done a full round trip. It's done a robo-track taxi round trip.
Now they're on the front lawn of the White House.
Yeah. But anyway, look, let's stay in the US because US inflation numbers came in at 2.8%. Stripping out food and energy, it was actually higher, which I was surprised by, 3.1%, because it seems like all the news has been around eggs. And but core inflation was actually higher when you strip food out.
Yeah.
But 2.8% was lower than expected, still above the Fed's target of 2%. But I think we haven't seen inflation come through, and potentially we haven't seen it come through yet, but we haven't seen it come through in the way that people were perhaps expecting an uptick with tariffs and the like.
I feel like the lag is there's a pretty, well, not significant, but like I feel like the lag is yet to come.
Yeah, because like the China tariffs they've been the ones that haven't been on and off. But we said we weren't going to talk about tariffs.
Tariff-free zone. Let's keep moving. I've got one for you, Ren.
Yeah,
one of Australia's one of Australia's greatest leaders in retail and just general corporate history. Brad Banducci is back in the headlines.
Most Australians would remember the former Woolworths CEO based on his terrible ABC interview where he asked the ABC to edit it.
His legacy was somewhat not tarnished,
but you remember him as your first CEO.
No.
No one forgets their first, and your first job out of university was at Woolworths. And God, you fell in love with him.
He's an amazing leader, very smart guy, very cool, calm and collected. Anyway, he's back on the ABC. Except on the ABC. He's back in the headlines. He's been named the new head of Australia's largest ticketing and live event group, TEG. He left Woolies in August last year, but wanted to obviously keep ticking over in the corporate world.
He was like, people hated me when I left Woolies. Where can I find an industry or a company that is more hated? There is nothing more hated than ticketing and live events.
He'll change that. Anyway, let's close out. We can't have a news headline without talking about Nvidia. And a recent report by Morgan Stanley has found that both Meta and OpenAI are struggling to get their hands on enough chips to train their AI models. Now, what does this mean? It means all roads lead to Nvidia.
Yeah. It means demand for Nvidia. Nvidia GPUs are still incredibly high. Obviously, we had the DeepSeek freak out where there was about a week where everyone thought the demand for chips and GPUs would be far lower because DeepSeek had managed to train an AI model with far less compute than American tech companies thought they needed. That really hasn't come to pass because demand is still incredibly high. Nvidia is down about 20% from its all-time highs in November. It's been pretty volatile, but definitely one that is worth watching.
Definitely.
Yeah.
Well, if you want to keep up with all the headlines, make sure you subscribe to our daily newsletter where we will send you a summary of all of the important headlines from around the world straight to your inbox 6 a.m. every morning. And the best part is, if you want to listen to those headlines, we also have a podcast called Headlines by Equity Mates that takes those headlines and delivers it in podcast form. Link will be in the show notes. We have 3 stocks that have taken a massive beating. The question is it real or is it a buying opportunity? We're going to bring in Mr. Beat Up to find out.
Mr. Beat Up. Mr. Beat Up.
I have the beat that describes that moment accurately.
Mr. Beat Up, aka Simon, welcome back to the studio.
Thank you. Excellent to be here today.
Excellent. Nice.
All right. So as Bryce said, we've got 3 stocks that we want to talk about today. The normal format here is that you come in with a stock that is beaten down, that the market's over. You think the market may have overreacted to. It's primed for a turnaround. You've had some big picks in your time. You picked Tesla's turnaround. I was about to say Telstra's turnaround. You picked Supermicro.
Yeah.
There's some which you're still waiting on. Nike.
Yeah. It's a slow burn.
Yeah.
At least it's in the green.
But this time we're doing something different. This time we've got a number of requests from the Equity Mates community. And so we've chosen 3 and we want you to run your eye over them and give us a verdict. So before we introduce the stocks, give us the Mr. Beat Up criteria.
Yes, so the criteria I like to work to really is a stock which is falling probably at least 30% to make it interesting, ideally over 50%, but really something which I think the market's overreacted to. So there's been some short-term news, something in the media, a change to the strategy, the market's punished it, but the long-term story and valuation is still there. And it becomes an opportunity.
Okay,
Nice.
so what
Nice.
we've got, I guess 4 points on the criteria. Fallen more than 30%, ideally more than 50%. Secondly, there's clear signs that it's an overreaction. Third sign, there's third criteria, a turnaround or a positive story emerging, some catalyst for the change. And then finally, that like the underlying company itself is quality.
Yes.
So 3 stocks. First one came in from Brad.
Hi Bryce, Ren and Mr. Beat Up. I think Celsius has been beaten up and would love to hear your thoughts on it. Love the potty.
Well, thank you, Brad. Love that. So, Celsius, these guys make energy drinks marketed as healthy. No sugar, big on fitness, all those sorts of things.
I mean, are you guys familiar?
I've
with
actually
them?
never seen it.
They
no.
were massive. They had a
They
massive
were
moment.
interesting.
Yeah.
They were a Wall Street favorite. Stock soared over 1,000% from 2020 to 2023. Some sort of insane growth, but that's really cooled off now, down 70% from their all-time highs. So it ticks that box. Simo or Mr. Beta, what's the assessment?
Well, I think first of all, you're saying you've never seen it, so I've brought in some props today.
Oh, nice.
For those who are listening, I've got 3 cans here of Celsius. This is the sparkling kiwi strawberry flavour.
Okay.
So I'll share those around. Maybe we can crack these while we're reviewing
Non-alcoholic,
the
of course.
Well,
Of
hold on. I'll
course.
crack this right next to the mic.
Nice.
Cheers.
Cheers.
So,
Do you have a prop for all 3?
No, unfortunately not, but my little girl decided to get up at 4 a.m. this morning, so I definitely feel like I need
Very
this.
sweet.
Oh, they're not bad.
Yeah. Okay.
Oh, you wouldn't be.
Contains no real fruit.
Of course not. You wouldn't be drinking
That's
one of
tea.
these every morning. It is pretty sweet.
Oh, it's energy. It's an
Yeah.
energy.
Yeah, it's
100
interesting,
milligrams
yeah.
of caffeine.
Oh, whoa. I was about
Yeah.
to pump it.
Yeah.
No, I don't want 100 mils of caffeine. Okay. So up 1,000% in 3 years, down 70% from all-time highs. Talk us through it.
Yeah, so I think just to give my verdict up front on this one, I'm going to call this one a beat up light. So, okay. This isn't a screaming value play, I don't think, but it's probably been punished more than its long-term story warrants. Just have to correct you there. I think it's actually up about 5,000%
Jeez.
to the end of 2024 before it started to drop.
Wow. Okay.
Yeah, I'm just looking at its chart now because it's wild. It from 2020 up 5,000% and then fell 70%. So in the last 5 years, it's still up 1,400%, even after dropping 70%.
All right. Why has it dropped?
So you've gone from a 50 bagger to a 10 bagger.
Yeah.
Yeah.
Wow.
So I mean, it's a mix of things. Mainly, growth has slowed. So after years of triple-digit revenue growth, it's dropped. Last quarter numbers were they fell off a bit into single digits. Bit disappointing. Energy drink market is just so crowded as well. Like Monster and Red Bull, they have huge marketing budgets. They're not sitting there doing nothing, and there's new players popping up all the time. So the market's fell out of love with it a bit.
Yeah.
But it is still posting double-digit revenue growth. I mean, how many consumer brands can say that? And they are rapidly expanding still in international markets. We don't hear much about it, or I haven't anyway, in Australia. It's got quite small shelf space at the moment, but it's growing massively in Europe. They've got a really strong partnership with PepsiCo, so they actually have a minority stake in the company, and some of their veterans have come over to help scale the business. So I think in short, it's still a fast-growing company. It's got a solid plan to keep expanding, but the valuation is still super rich, 60 times price to earnings.
So it is profitable.
It's profitable.
That's something.
It's doing well, but with that valuation, any misstep, it could get punished again.
Well, speaking
Yeah.
of missteps, I'm looking at its revenue growth. This indicates some of the story. So last 5 years revenue growth as a percentage: 74%, 140%, 108%, 102%, 3%.
Yeah.
Yeah,
That's
20,
it.
yeah.
That'll get you punished.
That will see your stock fall 70%.
Yeah.
Wow.
So I think overall the market reaction feels harsh, but not entirely irrational on this one. So watch this one.
Okay, so we'll say it doesn't quite meet the Mr. Beat Up criteria. Let's move to the second one, an Aussie darling that ran hard and has fallen since, Clarity Pharmaceuticals.
Please have Mr. Beat Up conduct analysis on Clarity Pharmaceuticals, CU6. Thanks.
Love it, Adrian. Straight to the point. Love it. We don't need any bucking around. Just a reminder, Clarity is, they develop radiopharmaceuticals. Really, essentially, that means targeted radiation to both detect and treat cancer, a company that has been spoken about a couple of times on the show before. Really, really interesting stuff. As Adrian said, please, Mr. Beat Up, tell us.
Hold on, we should give a plug for Equity Mates here. This is a reminder why you need to listen to Equity Mates expert interviews. Ricky Bannon came on the show in late 2023 and pitched Clarity Pharmaceuticals, and then it ran about 600%. So if that's not a reason to keep listening to Equity Mates interviews, I don't know what is.
Yeah, so this one, it climbed all the way up to $8.79 a share. It's now down 70% from those all-time highs. So my verdict on this one, this is a pre-revenue company. So no revenue means no real anchor to judge a fair value on. So it's more of a bet on the market sentiment in the short term and then the science coming to fruition in the long term. So I don't know if this is a mispricing of proven worth. I'd say this is a beaten down stock, but not a Mr. Beat Up stock.
Okay, so
nice,
what's
nice.
going on then? Why is it down 60%?
Yeah, so I think just like many small cap early stage companies at the moment, we're in this kind of risk off market. So it's struggling and there's no revenue. They're burning cash. I think there's risk now that it's going to go for its cash and need to raise again, which will obviously dilute the company. They've got a number of trials in play. They've got some phase 3 ones actually. One for their prostate cancer diagnostics called Clarify. Started late last year. The early data has been promising, but there hasn't been any blockbuster updates yet, which probably some investors were hoping for. So some investors probably lost patience, and I guess if there's any other trial setbacks, it could get punished further. But yeah, I mean, there is a bull case for it. Their tech is generally innovative, and they're pairing diagnostics with then treating and therapy in one platform. If they can get approval for this in the US and Europe, it could be huge. Like, it's a huge market, and success in the prostate cancer area could open doors to other areas. But I think this is one you could probably be patient with. There's a number of trials going on. The phase 1 and 2 trials expected to come out mid to late this year. But the phase 3 trials, the most advanced trials, aren't expected until sort of late next year, 2027. So time to do your research on this one. It's not really a standard Mr. Beat Up. I'm definitely going to do some more DD on this one. I hope it does work.
Nice.
But yeah.
I don't know if we've properly explained just how crazy this science is, but it's like rather than treating cancer with a blunt instrument like chemotherapy, which just kills everything, it has these like radioisotopes that are injected into the body and attach themselves just to cancer cells. And so if you're doing it for imaging, then when you go in an MRI or a CAT scan, they light up because these radioisotopes. And so you can see the cancer better, or you can now use those radioisotopes to destroy the cancer, like detonate them and just kill the cancer cells.
It's incredible.
It's like a profound
sci-fi
scientific
stuff.
innovation, and like whether or not it is a good investment is a separate conversation. Yeah. But it's pretty cool.
Yeah, I hope it succeeds because it's incredible as you described.
Well, speaking of genuine scientific innovations, let's talk about our third company. This one comes in from Nick.
Hey, Mr. Beater. What are your thoughts on Novo Nordisk at the moment? The stock has shed a few kilos this year, especially in contrast to Eli Lilly. Do you think it is a good buying opportunity at these levels, or is it falling out of the GLP-1 race? Thanks.
Awesome. Thank you, Nick. A reminder that this is not a buy, hold, or sell recommendation. We're just getting...
Why are you doing it for this one?
Because this was a direct, is it a buying opportunity?
Okay.
Look, we've spoken about this stock plenty of times on the show. It is playing in the GLP-1. Well, he's one of the leaders of GLP-1 drugs. Ozempic is their main...
Created the category.
Created the hype. What do you think? It's down 50% from its all-time high in June 2024.
Yeah, this fits the Mr. Beat Up profile.
Okay.
Here we go.
Strong fundamentals, incredible market position. I think the punishment here outweighs the crime.
Okay. All right. Well, tell us what the crime is.
Yeah. So there's probably 3 areas. There's supply chain competition and some recent trial results. So I guess the supply chain, they're just struggling to meet the demand. There's just so much demand. They haven't been able to keep up and meet that demand. So they're leaving money on the table. Competition's emerging. Eli Lilly is coming hard with their GLP drugs. And they just did a trial, Novo did, on their new obesity drug, CagriSema. And that showed lower than expected weight loss results in a phase 3 trial. So they got about 15% weight loss over the trial period. They were hoping for about 25 plus. So the market's gone whack, punished it, but I think it screams overreaction. I mean, if you look at it, it still owes a huge chunk of the GLP-1 market, huge wait list. The demand is insane. The target addressable market, or the size of the pie, is so big here. And they're also now testing these drugs in phase 2 trials for looking at alternative uses for things like substance abuse disorders. So if they can actually unlock some of those areas as well, like the market is just huge, and they are printing cash. They made 42 billion in revenue last year, and their margins are sky high. They're still raising guidance. Look, maybe Eli Lilly is a better company. That's debatable, but Eli Lilly's trading at 70 times price to earnings. Novo's trading at 25. So if you don't think it's going to be a winner takes all, could be an awesome entry point.
Yeah, I mean, it's growing. It's growing its revenue slower than you would think, at like 20% a year over the last 3 years, probably the average. But it's got 35% profit margins, and it's trading at 20 times earnings.
Yeah, it's priced like a mature pharma stock, not a high growth pharma stock at the moment.
Yeah.
Yeah, well, yeah.
So this one
it's not
is...
like it's just come out of nowhere, though. It is a mature.
Well, no, it's been around for 100 years. But
Yeah.
like I think our view is that the GLP-1 story is still in its growth phase, not in its maturity phase.
Yeah, I mean, we spoke about this about a month ago on the show. Like to your point, the addressable market here, the tailwind is just wild.
Well, I mean, Novo last week came out in Australia and said they think that their market, addressable market, is 50% of the Australian population.
But yeah, they would say that.
Yeah, but
That's good marketing.
Australian Institute of Health and Welfare numbers show 66% of Australian adults are overweight or obese. 28% of Australian kids are overweight or obese. If 66% of adults are overweight, maybe their addressable market is half the country.
Yeah, absolutely. And well, particularly if you can start bringing in substance abuse and all the other sort of second tier.
I reckon
effects,
substance abuse is obesity is the game.
The big inflection will come when they become, you want to be set before it becomes really, truly available to everyone.
Yeah.
Because then it's just going to be like game on.
Yeah.
'Cause it's still $500 a month, even here in Australia, for these things. It's like...
Yeah, the counter argument is that it gets commoditized. Like Pfizer is working on it. There's this like Viking Pharma. There's like a number of smaller ones in the US. And like, if supply does come in line with demand, and if it is commoditized in terms of like the cost of production is low, anyone can make it. That is the bear case, I reckon.
Yeah, I think both of these companies though are so far ahead in just production, supply chain, brand.
Yeah.
Like they'll
Sales and
they'll still
distribution.
command a fair chunk of the market.
I guess I'm saying like Novo has 35% profit margins. Like if that gets competed away to 10%
Yes, yeah,
profit
of course,
margins,
of
then
course.
all of a sudden, it's not trading on 20 times earnings. It's trading on 60 times earnings.
Yeah.
And that's the bear case for it to come down again. Yeah.
Big
But that's gonna
big
not
opportunity.
gonna happen anytime soon, I think.
Yeah. So I think of the three, this one I'd say is a classic Mr. Beat Up. Celsius, enjoying the drink, probably a Mr. Beat Up light, probably more in line with fair value. And Clarity, amazing company, but no revenue, can't really give it a value judgment at the moment.
Well,
Love it.
I'm also enjoying the drink, Simon, and I appreciate you bringing it in, but I kind of wish you'd brought in some Ozempic rather than some Celsius.
Thank you to Brad, Adrian, and Nick for providing some suggestions for Mr. Beat Up. If you want to have Mr. Beat Up cast his eye over a stock that's on your watch list, make sure you hit us up at equitymates.com/contact or through our Facebook discussion group.
Let's ask the community.
Hey, Equity
I
Mate.
just had a question.
Hey, Bryce, I've got a question.
Questions.
There are plenty of new crypto ETFs hitting the market here in Australia, but the question is, are they better than buying crypto direct?
That's right, Bryce. We got this question from Shadab asking about crypto ETFs.
Hi guys, my name is Shadab. I have a questions related to Bitcoin related ETFs. So there is a product in the market called EBTC by GlobalX, and there is another product VBTC by VanEck. So I was wondering, for a new investor in the Bitcoin field, should I go with either of these two ETFs? What are their pros and cons? Or I should directly buy a Bitcoin using some trading platform like SwiftX? I'm targeting to invest around, let's say, $100 a month into it. So please help me in deciding. Thank you very much. And keep doing the great work, you guys. I listen to you guys regularly, so that's a great help for me.
Well, thank you, Shadab, for the question. And a reminder, if you want to ask us a question, go to equitymates.com/contact or have a look in the show notes or YouTube description. You can write us a question, but would love it if you could record a question for us. And we should also say that everything we speak about throughout these episodes, but particularly here, not personal investing advice, just general advice for you to think about how it applies to your own personal situation yourself. With that caveat in mind, Bryce, where do we want to start? There's EBTC, there's VBTC, there's now QBTC, which is the Beta Shares Bitcoin ETF. There's more BTC ETFs than you could ever want to invest in. But are they the right way to invest in Bitcoin?
Well, I think what we should do is just go through the pros and cons of each and then let the audience decide what direction they want to take it, because depending on who you are as an investor and your risk tolerance, there are, I guess, different things to consider. So let's start with the ETF side of things. So here in Australia, the pros for investing through Bitcoin ETFs, firstly, it's probably a little bit more of a regulated environment. You've got ASIC that oversees the investing ecosystem with things like the Australian Stock Exchange, and that's what you would be buying through. So probably a bit more regulation. It's a little bit more simple, I would say. There's no need to manage private keys, cold storage, digital wallets, set up new exchanges. You can just do it all through your brokerage platform, so it's a lot easier. It's traditional investment structures. So as I said, through your brokerage accounts and the like. Tax reporting is also simpler because it's exactly the same as all of your normal ETF tax reporting. It can get very complicated trying to do tax capital gains if you're buying direct through exchange.
Or if you're not buying with fiat, if you're using your Bitcoin to buy other coins, then that gets
wild transfer from Ripple into Bitcoin. It gets out.
That's not the question here.
No, it gets out of hand. You can put it in your super fund because obviously ETFs can be held within super accounts. So if you're doing self-directed through exchange, you can get access to Bitcoin that way.
Depending on your self-directed platform.
Platform,
that's
true.
There's some of the pros.
Yeah.
On the flip side, some of the cons. The big one for me is management fee. So these ETF management fees, they won't be huge these days, but they, might be half a percentage point, so 50 basis points, 0.5%. But that's a fee that you wouldn't pay if you bought the crypto directly. Brokerage fees on a crypto platform versus brokerage fees on a stock investing platform. I mean, it depends platform to platform, but generally they'll be much of a muchness. But this management fee on the ETF is additional. If you care about actually owning your Bitcoin, you don't actually own your Bitcoin through an ETF. Not your keys, not your coins is the crypto statement. Limited control. You can't actually use the Bitcoin. There's no utility. You can't use it for transactions. Some of this stuff I think is less relevant for people who are thinking about investing through the ETF because, I mean, you're just interested. If you're thinking about buying it through the ETF, you're just interested in the price action, really. But there are some other cons when it comes to the investing case for either one. There's potentially higher entry costs and potentially higher minimum investment amounts if you're investing through the ETF, whereas if you're investing through a crypto exchange, you can invest with very small dollars. And also there are market hour limitations. Crypto markets are open 24/7, 365. The ASX is open, 10 till 4, Monday to Friday.
No, you have extended hours.
9:30 to 4, Monday to Friday.
Yes. So that's the pros and cons for the Bitcoin ETFs. I mean, you just really need to flip it on the other side for direct ownership. So the pros for directly through an exchange, you own the asset. You can put it in cold storage. You can take it off and have a digital wallet. As Ren said, no ongoing fees once it's sitting in your account. Greater flexibility. I can transfer it from broker to broker. I can also transfer it to other people if I would like. 24/7 trading. And obviously, if you're interested and have a cryptocurrency exchange set up, you get access to more than just Bitcoin. You can get access well beyond, there's thousands of coins available these days.
Yeah, and I mean, to close it out, but again, it's really just a flip of what you said earlier. The The downsides of purchasing directly, the coins are your own responsibility. There's potentially some technical complexity, regulatory uncertainty, potentially some tax complexity, potentially some exchange risks if you're buying it on a dodgy exchange. But if you're buying it from a bigger exchange, I was about to say that the risk is lower, but hey, FTX was one of the biggest exchanges in the world. So for me, the fundamental question is the convenience of buying it through an existing platform that I have an account with worth the 50 basis points management fee? And if the answer is yes, then the ETF makes sense. If the answer is no, then there are plenty of good exchanges out there.
I personally buy direct, but that is because I started my Bitcoin journey well before there was anything available through exchange traded funds. And so for me, the complexity of it and whatnot, like I've got over all of that and I can do it now pretty easily and it's all set up and I understand it. If I was to start fresh now, I'm not buying Bitcoin because I genuinely believe in 20 years I'm going to be using it to buy houses and groceries and all that sort of stuff. I'm doing it from an investment point of view, so I wouldn't have an issue with buying it through an ETF just to reduce that complexity.
So I'm the same as you. I started buying crypto before the ETFs existed, and I now just have a dollar cost averaging strategy. Small amount of every time I get paid, automatically transferred, automatically invested. And to be honest, I don't think there's anything wrong if people want to go down the ETF route. It is convenient, it's easy, it's all in one place. But for me, it's like you're probably paying a fee that you don't need to pay because it is pretty simple to just buy it from exchange. But that's just my 2 cents.
Love it. Well, thank you, Shadab, for the question. As we said, we love hearing from you. There'll be a link in the show notes to leave us a voicemail if you would like to ask a question. But we will leave it there, Ren. As we said at the top of the show, tomorrow we are dropping our next Basis Points episode. It is all about how one advisor thinks that we might be getting diversification wrong. Tune into that to find out how we could be doing it in a better way. But we'll pick it up next episode.
Sounds good.
I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.